Everybody keeps asking me about Tesla, and you guys know I love Tesla and I love Elon, so let's talk about it. What's happening with this stock price? Is it going to go up, down, sideways? Is it a house of cards? Is it about to crash, like many people like to say? That's what we're about to get into. And remember, in this free training that I always talk about, we go over exactly how we played Tesla over the last few months. It's actually the example right here in this little mini screen. Talk about how we played on the downside and the upside. So if you want more and you want to learn the strategy that we use and a bunch of our Fallible members use, then definitely check out the training. It's free. There's a link in this video and down below in the description and comments. Definitely worth it. And Tesla is just one example. We do this on a lot of stocks. So what's happening now is that Tesla has run up so much that it's literally one of the biggest companies on the market. What's its market cap at right now? 253 billion. It's nuts. And like it says in the CNN business article, Tesla exceeds the value of almost every company in the S&P 500. And these are huge companies. And out of all the auto companies that it competes against, if you want to call it competing, it is the most valuable on the planet, even ahead of Toyota. It's bigger than Coca-Cola, Disney, Cisco, ExxonMobil. There's now only 19 companies in the S&P 500 worth more than Tesla, one of them being AT&T. And the funny part is that Tesla isn't consistently profitable enough to join the S&P 500, but it's still bigger than most of them. And you really got to feel for these other car companies like Toyota, GM, Ford. How mad must their executives be? Like, look at Tesla's stock price and then look at something like GM. Just terrible. Just goes down, and then down some more. Even though they produce so many more cars than Tesla, make so much more money. And when executives are tied to their stock prices, this is not what they like to see. They got whole departments trying to figure out what can we do to move this stock price? Is it all about posting memes on Twitter? Like, is one meme worth 100 million? Because it seems so with the way Elon does things. 7 things every kid needs to hear. I love you. I'm proud of you. I'm sorry. I forgive you. I'm listening. Communism has failed every time it was tried. You've got what it takes. I think this is worth 100 million minimum. Elon's got to be careful though. You start talking about communism, you're also indirectly talking about the CCP, the whole world's mortal enemy. And if you say anything about the CCP, they're not going to let you operate in their country. And Elon has that big factory going in over there, right? So you better watch his memes. But it looks like people are waking up to what the CCP does, because did you hear? Like, TikTok is looking at getting banned. Well, TikTok isn't looking at it. The government is looking at banning TikTok. Already done in India. Good job, India. Now the US is looking at it too. So Tesla being shut out of China, it'd be terrible for the company probably, but I'm down with it. Time to cut ties with the CCP unless things change, as in the CCP is not there anymore. But even before the government steps in, maybe Elon will screw it up for himself. But maybe this is why Tesla's price keeps going up. When you have the future president of our United States hanging out with the CEO. He said when you go to your boy's house and you're both wearing orange. So cool. Can GM do this? Or maybe what GM needs to do is vehemently attack short sellers. You guys saw this release of Tesla short shorts, only $69, already out of stock. Oh, look at those, so short, so sexy. I'm pretty sure this is actually Elon modeling it himself. Does GM need a pair of shorts like this to boost the stock price? Celebrate summer with Tesla short shorts. Run like the wind or entertain like Liberace with our red satin and gold trim design. Relax poolside or lounge indoors year round with our limited edition Tesla short shorts featuring our signature Tesla logo in front with SEXY across the back. Enjoy exceptional comfort from the closing bell. Ouch, a direct shot at the short sellers. Because Elon was always tweeting jokes about short shorts because of all the short sellers. And by the way, if you're wondering if I read this word and thought liberace, first off, yes I did. Reading is hard. And I love when Elon goes after these short sellers and bears because they are just so stupid. And I made a few videos disrespecting these guys, but I just love it. I'll just do it again and again. Elon clearly loves it too. Speaking of stupid bears, JP Morgan raised its price target by $20 to $295 for Tesla shares. Yeah, they really did that when Tesla's share price is almost $1,400, meaning that they think Tesla is gonna fall 79% from current values. They're holding strong to that $295. But they stay honest because they had to increase the price target by $20 because results are results, and Tesla delivered 60% higher because results are results, and Tesla delivered more vehicles than they thought possible, 60% more. So JP Morgan, with their objective analysis, said, yeah, we'll raise it $20, but there's still a lot of risk. It's a lofty valuation coupled with high investor expectations and high execution risk. Thank you, JP Morgan, as if your price targets are relevant at all. They They don't expect Tesla to turn a profit in the second quarter, and they expect an earnings per share loss of 30 cents. And if Tesla doesn't turn a profit, that's going to delay their eligibility to be included in the S&P 500 index. And getting included in the S&P 500 would actually be fantastic for Tesla and really any stock, because as soon as you're in there, that's when you start getting all this passive money, because nowadays everyone is invested in all these ETFs and index funds that just track the index. So if you're in that index, your company is automatically getting that natural little push higher with its shares. As if Tesla needs any more, it doesn't, but it's still good. And this research from JP Morgan, if we can even call it research, is just so laughable, because they're like, hey, wait a second, even if they do report better than expected second quarter earnings, it could include items of one-time or somewhat one-time nature. Maybe they included some lumpy ZEV credit sales or the release of deferred revenue. Basically what they're saying or trying to say is that even if Tesla did report something good in the second quarter, it's still BS and we still don't like them. Like these ZEV credits or ZEV credits. I don't know if people actually use that word, but they are regulatory zero emission vehicle credits that are awarded by states to auto manufacturers that have, more efficient vehicles. And automakers need to earn a certain amount of these credits each year, either by producing a quota of electric vehicles or buying those credits from another automaker. So it's basically like the same carbon tax thing. What was it? Cap and trade? I forgot what that thing was called. So Tesla, being a fully electric automaker, obviously they're going to make some good money from it. They sold $594 million worth of these credits in 2019. But even so, it only represented 2.4% of their total revenue. So JP Morgan here, grasping at straws. But again, just to barely convince people that their research is still legitimate, they did acknowledge 3 upside risks to their bearish price target. For example, the price might go up if the demand for Tesla vehicles rise materially beyond our expectations. Okay, great, nice and vague. Gasoline prices could increase, or government penalties on combustion engines could increase. Maybe more people want electric vehicles after that, or maybe they execute better on their operation targets. You guys see how terrible this research is, and this is from JP Morgan. And I know when you first get into the stock market, you get all these free research reports from these banks and you think, oh, these are professional analysts, they know what they're talking about. But in fact, they don't know anything, and most of what they're doing is just BS, and they know it too. I have multiple friends in the equity research industry, and it's honestly going away because most things are switching to quant anyway. They don't really have a job anymore. They know it's BS and useless. We know it, everybody knows it. Like what we just went over is the worst research report. It's so stupid. And most of the times with this type of research on companies other than Tesla, they're always overly bullish, because if you're too bearish on a company, then you lose access to those executives because they don't want to talk to you anymore. And in this case, they barely have an argument, but they're just making a call that's super short and different from hopefully other people, and something that's so outrageous, a 79% drop from current levels. And they're doing that so down the line, if Tesla does drop, if it does collapse, then they could say, see, we call that very low probability scenario. We are clearly geniuses. It's like the people that call for a crash every year, nonstop, so that finally when the crash comes, they're like, see, told you so. It's the same as the saying that even a broken clock is right twice a day. So I can't even believe JP Morgan published something like that, and that's why I think the bears for Tesla are just so stupid. Same thing with the short sellers, who I hope all start freeballing in these shorts right here to enjoy that exceptional comfort from the closing bell when they're absolutely getting blown out of their shorts. Get it? But anyway, if you objectively look at Tesla, there is no way this is a good short candidate. When you're trying to short a company, it needs to be very clear that it's going lower. You don't try to short something like Tesla, which is completely sentiment fueled. People love Elon, retail traders love Tesla, and the thing is going to keep going higher and higher. You don't jump in front of a moving train. Or if you did want to short Tesla, if you truly believed that it was something that was going to fall apart, you wouldn't be shorting it right now. Because again, you're just going to get blown out like crazy. It's a stupid move. So why do short sellers do it, and why are the bears so bearish? It's purely ego and jealousy. So they look at Elon, right, and how much fun he's having and how much he's doing, how much he's worth, and they can't handle it. Someone shouldn't be able to do all this stuff and be so cool at the same time. And I know this sounds like the most childish reason, and that's because it is. And the thing with adults, especially professionals, is that they don't actually change from their childish desires. It's like in the schoolyard, if you see someone better at basketball than you start hating on them when you're a little kid. Same thing here, but the only difference is that, these older people, they make up all this reasoning in order to rationalize their base childish desires. Because when it comes down to it, it's jealousy. So their first objective, because they're jealous, is to bring down a successful guy like Elon, just for the sake of them not being comfortable with themselves and thinking that, hey, no one should be able to be that great and try this hard and do this many things. Let's bring him down. Can't be real. There must be some some con here. They let their insecurities really come out. And then the second desire fueling their shorts is that they want to make that hero play. It's that ego driving them. Just like this JP Morgan idiot. And not this guy. This is an ad. I swear, being on the trading exchanges is probably the worst job. Do you ever see a picture of these guys when they're not covering their faces and looking stressed? Why is this guy so stressed when the market is going straight up? Does he not know that stocks only go up? Does he not know who Jerry Powell is? But anyways, like I was saying, guys like that JP Morgan research, they want to do that thing where if Tesla collapses, then they could go back, even if it's 10 years later, they could say, hey, I was right all along. For those 10 years, I told all of you, I told you again and again, and you didn't listen. Even if the people not listening made tons and tons of money, doesn't matter. Because for idiots who are not successful in the stock market, the only thing that matters is whether they're right or wrong. Where if you're an actual successful operator in the market, then the only thing that matters is whether you're making money or not. The best investors, the billionaires, they're wrong all the time. And it's so funny because JP Morgan around the same time upgraded Nikola, which is another company I get asked about all the time, the Tesla competitor with no product. So Nikola, like, this stock was just ridiculous, right? And then it fell over 50%. So as it fell, JP Morgan actually raised their price target, even though it's a story stock, as if Tesla is not a story stock. They say, yeah, it might be volatile, but there are some real good reasons why it could go up. For example, they might announce a partner for their Badger truck, which does not exist. Or they might have a hydrogen station deployment plan for the UK. Or maybe they potentially accelerate the implementation of this or that or whatever. Who cares? It's just once again stupid, because you could take all these reasons and just turn them into bearish reasons too. You could say these are all reasons why, Nikola isn't going anywhere. So for some reason they're so bearish on Tesla but so bullish on Nikola. Stupid reasons either way. You see what I mean here, right? Just don't look at this analyst research. It's idiotic. And I'm not saying not to play Nikola either, because you definitely can make great money on this. It's super volatile. And I myself am playing Tesla, like I told you. That's what we go over in this training. But the most important part that we go over in this training is risk control. Because like I said, you could play Tesla, you could play Nikola, you could play any of these crazy stocks. And it doesn't matter what a stock is, it doesn't matter what the research is. Really what matters at the end of the day is it going up or is it going down? And even more than that, the true key to investing is that risk control that no one wants to talk about, but it's so important because yeah, these stocks can go up and they could go down real fast too. I don't think Tesla's gonna drop 80% like JP Morgan thinks, but we saw Nikola just drop over 50%. Tesla's dropped over 50% a few times. Tesla just got crushed recently. So what's the constant to still be able to make money through all this craziness? Again, the risk control, the trade management, that's the stuff we go over in this training. That's the main reason why we're able to make money on things like Tesla. Not just because Tesla is a great stock. That's like 10% of the process, picking a good stock. Other 90% is how you're actually managing it. How you make sure that you don't get cut by this market on the downside. So anyway, free training, there's a link in this video and down below in the description and comments. Definitely check it out. And if you want to hear more about Tesla as we continue to ride this stock higher, we're still in it with the strategy that I'm talking about, then definitely subscribe to this channel and I will see you in the next video. Stay fallible out there. Bye.